Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, March 27, 2018. In this video, we'll take a look at the short trade ideas on the site, give a quick update on all of those. I'm going to start out here with Enphase, ENPH. Actually, I'm going in order anyways from just how they're listed alphabetically on the active trades. This one was just stopped out. This one we shorted right here. And we had a stop on any move above 505, which means a print of 506. So we're taking out for, let's see, I think the short entry, if I can get it, zoom in here, was somewhere in here right after the breakdown. So roughly a 5-6% loss, yeah, about 5% loss or less, because it's actually, now keep in mind, I provide beta adjusted position sizing. This was a very volatile trade. This is up. This stock was up over 10% earlier today, and that's not unusual to see the stock move that much. Therefore, that's why I had a beta adjusted position size of 0.75%, meaning three quarters of position size. If you usually take 10,000, you would only wanted to put maybe 7,500 in this. Therefore, a 5-6% loss is 3.5-4% beta adjusted. In other words, you would have lost the same amount on a regular trade if it only went down 3 to 4%. So with that being said, if you're still in it, if you gave it a little more room, this is still another divergent high. I don't know if this is a news move, news initiated pop today, but it's still working its way up with a divergent high. But as of now, I'll post an update on the front page to make it official that that trade has exceeded the stop of 506 and is no longer an active trade. And just a quick look at how to access the trade ideas. I covered this in a long video. If you're new to the site, just hover on trade ideas. You'll see the lock key. That means you have to be signed in to access these. And we're going over today, right now, the active short trades. And always, I would say this, always go by the notes. If you look in here, for example, if you're looking for trade ideas, you can sort them by symbol, by date. That'll just be the most recent update that I made. So the last update was on Siri. We're covering these by symbol today. And of course, you can click on the symbol or the ticker symbol for any of these trades, and what it will do is load the post, the previous post for that trade. So then you can go in, check out the uh, uh, adjusted the trade parameters. And also, I don't know if you're familiar with this. When you see the little dotted underline there, that's called a tooltip. It pops up. So I use a lot of terms that I've made up myself, or some of the terms might be, well-known terms on Wall Street that others might not be familiar with. So just hover over there, and you can see you get a little pop-up box called a tooltip. Um, Anytime you see this dotted underline there. All right, so the next up, we're going to cover LABD. That's biotech ETF. And I mentioned, one can either short XBI, and I always like to use the chart of the one-time non-leverage ETF really when charting. So the reason behind this trade was a breakdown here and a back test, and that back test put in another divergent high. So although they're not all labeled, we had a divergent high at this point, followed by correction, just like we had a divergent high here. Correction, again, it's simple wash, rinse, repeat. Divergent high, correction. And this correction, this was an extension of the previous divergent high. And so therefore, we've started to move impulsively down, a lot of red candles since that back test, and I still think this one's going lower. Although there is support right here coming up around 87, 86.37. And let's look at LABU. I figured, or LABD. I'm sorry, that's the bearish three-time leverage shorts the same index that we were looking at, the same S&P Biotech Index that XBI does. And so far, we've come within just a mere 2 cents, I think it was. I have a target at 369. We hit a high of 365. Okay, 4 cents. We're 4 cents shy so far, but it still looks good. And there's a lot of potential in this trade if the markets break down. If the broad markets break down, and or the biotech sector will obviously help if QQQ breaks down. A lot of biotechs are in the NASDAQ 100. If so, then we take out this horizontal line here. The actual resistance level is at 381. I set my target down well below that to help assure a fill. Hopefully we get that. I think we will. But if we take out that 381 level as well as this downtrend line, there's a lot of potential for this trade. I could add targets all day long here. Again, if we get a breakdown, because the charts are looking pretty ugly right now in both the broad markets and the biotechs. But as of now, I'm leaving that as the official trade. So if we can get it, get out, and maybe we'll recycle back in on a pullback. Again, depends on how the chart. Next up is NKTR, Nektar Therapeutics. Looks good. It's a biotech stock. It hasn't really started playing out for much of a correction yet, although we have broken trend. I can't remember if if we shorted it within the wedge or after the breakdown, but either way, there it is. It's below trend line support, and indicators are now pointing lower. So I do expect this one to continue on down here to that first target, and that still has another downside of about another 14% to the first target and about 34%. And I'm sure there's a decent beta adjusted position size for that. Yeah, I just checked the notes on another monitor. 0.75 also, meaning, temper your position size down by about a 1/4% due to the above average return potential as well as the above average loss potential. So as of now, that one's looking fine. It just hasn't started playing out yet. Looks like I accidentally skipped over Netflix. That should have come before NKTR. But either way, this one looks so far so good. Started to play out. We had a breakdown of the wedge here, and this is the initial kickback rally. And again, Netflix is a big component of QQQ, the Nasdaq 100. So therefore, it will trade largely in line because of all the indexing that we have nowadays. There's so much money in these index funds. So this bounces in sympathy with the market, and I will say this: you don't have to have the broad market play out, for another 10, 15% drop for this trade to play out. There are times I even made a case for a short on Apple a few years back, and Apple had one of its worst bear markets in years, while the S&P 500, even the Nasdaq 100, of which it's a top component of both, rose over that time. So yes, there's a lot of indexing in near term that will, generate, there'll be a correlation with the broad markets. But I just want to make clear that, each of these trades they're based off their own unique charts, and unless I see something here that foils this bearish chart pattern, I still very much like this trade and think it's coming back down to, at least this second target here, and we'll just have to see from there. And of course, that's the first target, second target. T3 is the first of the 232 level or the yellow uptrend line. Here I have there's a big gap here to be backfill, so I set that levels at 228.63, and therefore I adjusted my price target up by several percentage points. On a $300 stock or $200 stock, you're not talking pennies anymore. You're talking several dollars, because on a $200 stock, every 1 point or $1 move is only half a percentage point, not very much. So therefore, that's why my price target's set well above 228.63, which is the bottom of that gap, which is where I think we eventually go. But again, we have this other trend line here that may come into play first, depending on how long it takes us to get down there. All right, next up, Sirius Satellite or Sirius XM Holdings. Not much to say. Looks clean. There's your negative divergence. We had a breakdown, very impulsive move so far. Kickback rally. This to me looks like bear flagging action. On the 60-minute chart, you can see we hit the first target. We had a reaction. There was a lot of momentum in the markets then, so we overshot that target by a little bit, bounced. And again, this is covered in the FAQ section under trading related questions, the reasoning why I list multiple price targets. Define your trading style, but much more often than not, not always, but much more often than not, you get a reaction, and that's why I list these different targets. So an active trader can either game a bounce, or if you just want to get your confidence up, get a few winning trades under your belt, just target these shallow targets. If you're doing that, use a tighter stop than the maximum suggested stop. But if you're a long-term trend trader or swing trader, then you're willing to ride out the minor squiggles along the way, then set an OCO order. One cancels another. A buy to cover limit down here at 578, and a stop at whatever the stop parameter is. I don't see it on this chart. You'd have to reference the notes on the trade. But as of now, it looks good. And of course, as with most short trades, once you have a counter trend reaction, then you want to focus on the previous reaction low. That's an important support level. See if that low is undercut there, since we overshot my other support level by a little bit. Let me take that line away now. All right, a few more to go. Twitter, TWTR. Somebody brought up in the trading room today, you're starting to see this move down impulsively. This is another excellent example of why list multiple price targets and how you can benefit. This first target was very shallow. It was hit quick. I held on. I didn't try to game any bounce there. Plus, we had just broken down from the 60-minute rising wedge, but I did state, both personally taking profits and suggesting that active traders might want to. The bounce was likely off that level. You could have gamed a bounce, I know I'm playing the game of high to lows because if I grab the trend line, it's going to move. So I'm just going down here to lows. But that was an 8% bounce. Let's say you played half of that, 4%, or 5%. If you covered and reversed your position there, you could have played that bounce, got back in short. You don't even have to reverse it on trade. You can cover, book, take profits, recycle back in on the expected bounce, and therefore this trade. Let's see where we. Okay, we entered up here 35.82, so right around here. And the first target was hit for a gain, I think, what was it, 14%? Something I'll have to check again. But again, you could bounce out, reshort it back here. And so at this point now, instead of being profitable by, 18 or so percent, you'd be profitable by, well into the 20 something percent, 25% or more, depending on how you traded that. And most importantly now, and this is the update I posted in the trading room, you can see this thin zone here. If I turn up these volume at price histogram lines on the left, it's what I refer to as a thin zone. A gap, by definition, is the ultimate thin zone. This represents the trades that occurred at this price level. So here's the price scaling on the right. And so you had a lot of traders here, and these levels work well as support and resistance. When you see these long bars, in other words, here's a level right here on the volume price histogram. There's a very important level. Now we're already below that level. So this was support, and you see there's just a little bit, small red bar here, and that's what I mentioned in the trading room today on this update. That represents this small amount of trades and just a little bit, these few little breaks here. Twitter was fighting for its life, trying to cling to that support. Um, and it's finally failed and given up the ghost. This is an impulsive move down, and while anything is possible, and we probably won't be a straight shot down, I do think we work our way down to the bottom here. And this target is set just above the gap. The bottom of the gap is around 2709 or so. So I set the target at 2755, a little bit above that. I want to make sure we don't reverse, even there's a little reaction before the bottom of the gap there. So this one looks good. Still more meat left on the bone, but we are sort of getting into what I call technical no man's land, which is when a security is between um, support and resistance. This is resistance up here, or now at this point, yeah, anywhere from these reactions up to that line up there, and this is support down here. So we're in the middle. So you really would have wanted to either hold on to this one or reshort the bounce, or if you were shorted it here, you're golden right now. You're good, and at this point, might as well just go ahead and lower your stops. Where to? At the very least, maybe above the just above this reaction high. That would assure you a profit on the trade and allow you to let it continue to run and build on your gains. And finally, URGN, Eurogen Pharma. We're almost at break even. We're slightly profitable. The entry on this one was at 52.85, right, about right here where we broke down below the wedge. We back tested a little. We're consolidating. You can't really say that we've rolled over yet. We haven't seen any impulsive move, but it's still bearish that we're below trend. I have two trend lines here. They were both intersecting, primary and an alternative trend line. And you can see once we broke down 1, 2, 3, 4, with several failures at that trend line. So my expectation is sooner than later the stock will probably roll over, come down, hit this first target level, bounce off there, and continue on down to that final target, which would represent about a 31% correction. And from there, I would be covering my entire position. And that does it for the active trade ideas. I still have a watch list of both longs and shorts, and I'll cover those either, those that stand out will make it on the front page as either trade setups or active trades, if they're just now breaking out. And I'll also, from time to time, I'll share what's on my watch list as unofficial trade ideas because there's so many out there, guys, and you never know which ones are going to pop and which ones aren't. But again, I try to take what I think are the best looking and also most timely. I'll watch a setup for days and weeks and even months or more before sharing it because I try to put them out there as close to the breakdown level as possible to keep things streamlined on the site. I don't want to inundate you with dozens and dozens of trade ideas. It's like trying to hold sand or water in your hands. It's just going to slip through your fingers. So that's the reason why a lot of these trade ideas come out. And if whether they're in setup form or immediately posted as a trade idea, it's usually they're not on there for, they're not listed as a trade setup normally for much more than just a few weeks at most, sometimes just a couple of days. All right, we'll wrap it up here. And if you guys have any questions, just drop me a line in the trading room or under the comment section below this post. This has been Randy Finney with Right Side of the Chart. Thank you.